Hey, welcome back. Today we're going to talk about, can I buy investment property with 10 down? So if you're interested in real estate investing, you might be wondering, can I get into an investment property with as little as 10% down for a down payment? The short answer is yes, but it depends. It depends on what kind of property you're going to be buying, how much money you're going to be bringing to the table, what area you're in, what kind of lender you're working with, several different things that you need to take into account, and that's what we're going to cover today in this video. All right, so the first thing we have to understand is we need to take a look at the different loan options that are available to us when we want to get into an investment property with 10% down. So these, especially with the big banks, and if you're in Canada with CMHC and different things like that, these rules and regulations can change quite quickly. So you're going to have to look at what's going on in the market typically today. Now, generally speaking, for an investment property, you're going to at least need 20% down. And if you're into a multifamily, it could be 25, 30% down to get financing. However, there are certain exceptions. For example, if you're going to be buying a property, a residential property that you're going to be living in and renting out as well, then you very well may be able to get into that property for 10% down or even less, perhaps even as little as 5% down. So for example, if you're buying a single family home or a duplex or a triplex or a fourplex, those usually come under residential financing. And in that case, if you're going to live in that property, you could very well get into that kind of property with as little as 10% down. But again, it depends on what you're looking to get into and what's going on with the lenders in the market. Now, you can look at a variety of different lenders. You can look at traditional lenders like the big banks and the credit unions, or you can start looking at private lenders as well. So hard money lenders and private lenders. These folks take a bigger look at the value of the property that you're getting into. And if you're able to get into it with a smoking deal, they very well may let you get in with as little as 10% down. They just need to make sure that they're super comfortable and that they are covered first. So those are a few of the things that you need to look at if you want to get into a property 10% down. All right, so a common sense thing that we need to take a look at when trying to buy a property with 10% down is, what does that actually represent? 10% of what? So you need to calculate how much you can afford for a property, how much property you can afford in order for your money to cover the 10%. So for example, if you got access to $25,000 and that's going to represent 10%, then the maximum you're going to be kind of property you can get into is $250,000. Makes sense, right? So take a cold hard look at how much money do you have access to and how much will that get you if you can get a 10% down financing. Now, if you're going to be working with the big banks, credit unions, etc., you're going to have to really take a look at your credit situation, your financial situation, your income situation, and your credit rating, because quite frankly, they're going to be taking a cold, hard look at that. So you're going to need to have really good credit, or at least very good credit. You're going to need to have good income. You're going to have a good debt coverage ratio there. You're going to have good, solid, steady work, probably not being self-employed, unless you can show 3 or 4 years of regular employment income. You're going to have all of those ducks in a line first before you can even think of qualifying for 10% down. Next thing you want to look at is to make sure you got a good team around you, your real estate power team. Now, why is this important when it comes to 10% down? Because, for example, you want to make sure that you've got a good finance specialist on your team, somebody like a mortgage broker that can shop around for the best possible financing for you. There's only so much you and I can know about financing. Mortgage brokers, mortgage professionals, especially if they don't work for a specific bank, can find you the best options and have the greatest number of connections and contacts out there. So get a really good investor-focused mortgage agent to be working with you, a mortgage broker, better said. And then they can help you find that really good financing. Other team members could include a realtor. If you get a really good realtor that's looking around for the kind of properties that you're looking for and that you can afford, that's going to simplify things. Plus, they probably got good connections with mortgage brokers if you don't have one already, property inspectors, everybody that you need in order to do a good investment deal. Want to make sure that you got your power team lined up first. Okay, and then last but not least, you got to find a property that fits your parameters. You got to look around either on market or off market deals and find the kind of property that you're looking for that you can afford, that fits within your budget. So if you got $25,000 for the down payment and you're pretty confident you can get 90% financing, then you need to find a property that's in the $250,000 range, right? Just makes sense. So make sure that you're looking around and you're laser focused on the maximum amount, the maximum value of the property that you can afford, and look for a bunch of different options. Make sure that you've got more than just one in case one deal doesn't work out. You can go on to the next one. And last but not least, think about bringing on joint venture partners. If you've got limited capital available for down payments, that really obviously limits your choices. First of all, it limits how much property you can buy. Second of all, it limits what kind of lenders are going to loan you money. Third of all, it just makes things a lot tighter for you. If you have access to other people's money in the way of joint venture partners or investor partners, then that opens things up. Now you don't have to worry about coming up with a 10% down or only having 10% down. Now you can join forces with people. So say for example, you got the $25,000, but you'd rather look at a property that's around $500,000. Well, you could bring on a joint venture partner who also has $25,000 and join forces. That just increases your availability. That increases your options. That makes things a lot easier for you to find the exact kind of property that you're looking for. All right, speaking of looking for properties and looking for joint venture partners, if that's what you're doing, I got the book for you, Money Partner Formula. This is my process for attracting your ideal joint venture partners, your ideal private lenders, and getting them to come to you instead of you chasing after them. Go ahead, grab a free copy, investorattractionbook.com, or click on the link in the description below. This is going to show you how to raise your first 6 figures in a matter of weeks and even 7 figures in a matter of months. Get your copy today.